what's up, and welcome everyone to another episode of Wolfe Street. For those of you that don't know, my name is Wolfe, and for those of you that do, thanks for checking me out again. As always, you can check me out on all social media platforms at EveryTimeICash. That's at EveryTimeICash. This video and all my videos are intended for educational, informational, and entertainment purposes only. They're not to be substituted as financial advice. Please seek the help of a financial professional if that's what you're looking for. I'm just some dude on the internet giving his hot takes or lukewarm takes, whatever. And just kind of going over some stuff that he sees. So this is going to be a really quick video. I just wanted to talk about something that I'm seeing. I get a lot of questions about, like, how do you trade this? What's the direction? Is it bullish? Is it bearish? And the short answer, it's neither, right? So it's a whippy market. And I just wanted to go over very quickly some aspects that, like, how extreme some of these moves are and why it's important to just kind of sit it out for the most part and just pick your spots. So I'm just going to jump right into it. So for the very first thing I want to say is this has been a volatile market across the board. The VIX is sitting in the upper 30s, and it's staying there. It's not selling off. It's not aggressively moving one way or the other. It's just kind of sitting in the 30s. And so the longer that this persists, the longer that you can have these wide ranges. And it's predominantly a headline-to-headline market, so you get headlines out of Ukraine, Russia. It's positive sentiment, things rip. It's negative sentiment, things fall down. We saw that very explicitly today. It was not seen more explicitly than in any other sector beyond the energy complex. So energy today was on pace for its best day in nearly 15 months. And this is actually wild considering how far energy's gone and how far the sector's gone in the last couple of weeks. So at one point today, it was up nearly 5%, and within 40 minutes, it had flipped, it had reversed, it was red before ultimately recovering. So it's really important to kind of keep that in the back of your mind when you're considering, whether or not you're going to be aggressive or whether or not you're going to put on something that's going to last longer than an intraday move, right? So this is really important also because it kind of gives you an opportunity to day trade this market. So if this is something that you're good with or good at, if you can find ranges, find support levels, find pivot points, find prior resistance, whatever, however you trade, if you can find these levels that you can trade around, it's a very beneficial market for people like you. If you're not that kind of investor, not that kind of trader, and you're slow and steady, you got to find stuff that's breaking out on longer time frames and larger breakouts that you can kind of swing into, or you got to find something of value that can kind of pay you a dividend or something along those lines. It's all totally relevant to, or relative, to what kind of trader or investor you are. But you're seeing this across the board, and you're seeing more and more volatility for longer periods of time. And this is also something that we saw in the overall market itself. So at one point, the S&P, first of all, the S&P and Nasdaq started the day in the red for the most part, and then sold off before going green, and then looking like it was going to be blue skies, and then ultimately closing pretty much close to the lows of the session. I think there was a 324 level on the QQQ. We'll go over to NASDAQ here in a second really quickly. But it was about 324, which was the opening price basically. And it was the push-pull level late in the day before it really broke it and kind of accelerated into the close a little bit. So this is really important. It's important to know these things. It's important to know that, like, this is the kind of market that you're in. And when you understand that this is the kind of market that you're in, you kind of understand that you've got things, pressed up against you, and the odds are stacked up against you for an opportunity for multi-day moves. As I speak right now, the futures market is green. Who knows what will happen by the time we get up in the morning. But all in all, we have these situations where the S&P is weighed down by the top stocks in the index. So when we were going up, this was a positive catalyst, and now as we're going down, it's a negative. So this is the total S&P 500 versus the top 10 S&P 500 stocks by market cap as a percentage of total S&P 500 market cap. So that's a mouthful, but essentially the top 10 stocks in the S&P still today represent over 30% of the S&P. That is a huge number. Like you can look down here, that's a greater number than we had in 2000, and you got to go back to like the 1970s to get a print like this. So we're in a situation where 10 stocks account for a third of the market, and those 10 stocks are not necessarily behaving well. And in situations like this, you will find on days where like some of these energy names really rip, you'll find a lot of names actually going up, but the overall market not really following suit. And that's predominantly because you're being weighed down by these large names, right? And so let's just take a look at the overall market in general. So here's the Nasdaq. You have this really clean, well-defined falling wedge, head and shoulders, if you want to call it that. And it's been respected for the most part. So it undercut here and undercut yesterday before, or this afternoon before rallying a little bit. And now we're just kind of flirting with it. So this is an important thing to keep in the back of your mind because it kind of shows you that the overall trajectory is from the upper left to the lower right, which is a downtrend. And it's showing you that any instances of rallies were getting sold off, predominantly around this 20-day moving average. Today, at one point this afternoon, we hit the 5-day pretty much to the penny before rolling over and just selling off into the close. So this is important to note. It's important to know where we're at. Below the lows that we set today, we have last week's lows, which were these are lows from the 24th, of February, which were, let's give you the exact number here, 13,983.25. So that's your low. Below that, you're just looking at 13,000 basically, right? And so in instances like this, you want to know where you're at, you want to know where your levels are at, and you want to know that the 5 days sitting at your breakdown point right now, which is 13,485 basically, and you want to know that there's support down at 13,000 basically. And that's the Nasdaq. And the reason I bring up the Nasdaq is because the majority of those 10 stocks that make up a third of the market are tech stocks. So you're talking about like Apple, you're talking about like Amazon, you're talking about like Microsoft and Facebook and Tesla. And if you just take a look at all these stocks, the exemption here being Tesla, which is kind of just flirting with its trend, they're all like really bad looking charts. So in the case of Amazon, you have this range that it's been in since 2020, and ultimately we're flirting with breaking it down. We actually closed below the bottom of that range today, and these are just like not good setups in general. Microsoft as well, broke that trend, stalled out at moving averages, and then rolled over. Facebook, we already know it already broke that trend, and it looks like crap. Google's another one. Google's one of the ones that's held up the best. And again, it's just trading at the bottom of a range. Apple had their event today. It's being propped up by this 200-day. Let me just put an arrow here for you, make it easy. Being propped up by this 200-day. That's where we found support on the 24th. But essentially, these are all upper left, bottom right, downtrend looking stock charts. Exception again is Tesla, but again, same thing. Still have, whether or not you have it kind of holding a longer term uptrend, you still kind of got a downtrend here that you can see it. Depends on where you want to draw it, but essentially you got upper left, bottom right action, and then on gap ups, it's stalling at the 20-day. So these are things that you want to keep in the back of your mind. It's also important to kind of know where we are essentially with some of these sell-offs. So today, for example, we had I think the highest volume day on the NYSE to date this year, which is a good thing because as these things start to sell off and really start to roll over, you get these dislocations that we're looking for before we can actually expect to step back in and be a little bit aggressive. So we're not there yet. Here's the S&P. Let me just do this real quick. Here's the S&P. It'll just kind of show you we're still upper left, bottom right. Let me clean this up a little bit. Upper left to the bottom right. You were in this like rising wedge for a while. And now we broke out of that eventually, created a new high, and now we're rolling back over. But essentially, really crappy chart. And same thing across the board. Here's your Nasdaq 100. here's your Dow Jones, same thing. We're just no real leadership, no real support, and we just are not in a situation where it looks good. Dollar looks good though, which is a wrecking ball globally. But all in all, you want to just make sure that you are aware of these levels. You want to have levels set up. You want to know, what's oversold, what's overbought, and you want to kind of just pay attention. If you want to play ranges, for all intents and purposes, go ahead. Here's the XLE, for example. We went over that at the beginning. I'm just going to show it to you in real time. You had, a gap up. We were up about 5%, and then within 40 minutes, like I said, like that, we sold off. We were red. It held that 20-hour, but essentially, you get these violent moves. You get the shaking of a tree, and the market really doesn't really go anywhere to the upside. It's constantly getting rejected. Anyways, I just wanted to kind of go over some of these things with you. Just wanted to bring it to your attention. I just want to say thanks for watching. Thanks for the time. If you like videos like this, I'm trying to make them shorter and more consistent. If you like them, please leave me a message below. Hit the like button, share it, whatever. It doesn't cost you anything. Thanks for your time. Thanks for watching. As always, stay safe, stay profitable, and stay locked in.